Nothing in this program should be considered investment advice. It is for educational purposes only. Please hit pause and read this disclaimer in full. I think the stock market is getting set up for one of the greatest rug pulls of all time. This is my thesis, and I'm going to explain it to you. Hello, everyone. Dr. Chris Martenson here of Peak Financial Investing, also Peak Prosperity, here with another edition of Finance U. Today, I'm going solo because my compatriot, Paul Kiker of Kiker Wealth Management, is off on an anniversary with his lovely wife, Holly. So let's get started. I think we're going to have this incredible rug pull, and I'm going to center it around Germany. I mean, what the heck, Germany? Let me lay out my thesis. Before I begin, first, very simple axiom of asset prices, whether they're stocks, bonds, houses, tuna fish, doesn't matter. The prices go up, right, when there are more buyers than sellers. And prices go down when there's more sellers than buyers. That's really it. That's the whole thing. So when we see prices going up, we can conclude, wow, there's more buyers. There's buying pressure. That's what makes prices for things go up. And conversely, prices go down when there's negative buying pressure, as it were. Okay, so as I look at the scan today, so this is here on Thursday, the 26th of September, wake up this morning, and this is what the futures market looked like. So these are a bunch of different futures, and green means up, red means down. If it's sort of a neutrally color, let me see if my laser pointer works today. Yeah, so if it's one of these neutrally colors here, up a little bit. So these are all the major indexes across the top. Look at this bright green, super bright green up here. Everything's going up, including the DAX, which is the German market. So we've got the Nikkei and Eurostox and Nikkei and Eurostox here, etc. Everything's going up. Meanwhile, oil going down hard. How can that be? How can the economy be improving, which is what we're told improving stock prices mean? It means the future's brighter. You got to put on your shades. It's so bright. Meanwhile, we see gold here popped over 2,700 and silver over 32, closing in on 33. The dollar's down at about 100 on this unit. And so the dollar's going down a bit. How do we make sense of all this? But let's start here. First, we have a new all-time high for the S&P 500. That must mean that we are at a new all-time high of economic output, activity, excitement. Well, we're really not. When we look at a lot of measures for the U.S. economy, it ain't doing all that great. It's middling along, but it's not all-time new high great. So what is this all about? Like, how can we be at all-time new highs for the S&P? Well, you can make some stories up, and the United States is the best place to be, and everybody wants to sort of put their money here or whatever. We can come up with a variety of reasons why that might be, but how do we account for this with the German DAX also just powering to an all-time new high? Now, if you had sharp eyes, you noticed not a lot of difference between these two charts. You see how they had this is the yen quake, the carry trade quake that happened here in August. It was a 3-day long quake, and then boom, it just reversed. You can see that on the DAX. You can see the same thing on the US S&P. So obviously these are trading like one market, not two separate markets, right? Germany's in very different prospects right now than the United States economically, but its stock market is trading almost identically, tick for tick, looking a lot like it. But here we are, the German DAX is an all-time new high. Now, how do we make sense of that? Well, I have a theory. But first, let's look at this too. We also have an all-time new high for gold. Now, when we're starting to get to new highs like this, again, it simply means there's more buyers than sellers. So there's been more buyers for the German DAX, more buyers for the S&P, more buyers for gold. There have been more buyers for houses, more buyers for everything. This is consistent with lots of people with lots of cash, right? Whether they're central banks, whether they're sovereign nations, which I think are the two main drivers of the gold price right now, it's kind of irrelevant where or who those people are. We can just look at the chart and say, looks like there's more buyers than sellers for gold and everything, except this one thing. One really odd note in this story is oil. So oil is back to the same price it was in 2005, which is just a little over $60 a barrel, 65. Here it's at 66 today. But it's been in this really tight range with some notable pops and drops. But basically, it really is hovering like, hey, guess what? For the last 10 years, the right price for oil, wouldn't you know it, has been somewhere between $60 and $80 a barrel. And right now it's at 66, but it's falling. And it fell another hefty 2.25% this morning when I took this screenshot of the oil futures. Now, this is WTI, that's West Texas Intermediate. We could also look at Brent. It's a couple dollars higher, but same exact chart pattern because obviously oil, a fungible commodity. If you could buy Brent or WTI for a lot cheaper, you would buy those instead. So the price always tends to equilibrate, but Brent's a little bit more expensive by a few dollars typically. So how do we account for this? Because oil tends to fall during recessions and it tends to rise during expansions. Stocks tend to do kind of the opposite, right? They rise during expansions. I mean, they do the same thing, right? They rise during expansions and stocks are supposed to fall during contractions. Well, this is price of oil spiking to an all-time high there of $147 a barrel intraday in July of 2008. And then, of course, we know 2000 later in 8, things got a little spicy and we had the great financial crisis. So we saw the price of oil fall. But then it came back up and settled around over 100, and then it fell again here in 2015. And that really caused a lot of hemorrhaging in the oil space. And then even here, we saw it go very briefly negative back down here in 2020. That was a very famous moment. Rallied back up to 120, and then it's just been going down ever since here and falling. I don't believe that this price of oil is actually a real price. I think it's now a narrative controlled thing. Everything in the United States now is narrative control. It's all about narrative control. They have to control what's misinformation, malinformation, disinformation. There's a lot of people at the federal level who are very concerned that you say the right things and you don't say the wrong things, and that you think the right things and you don't think the wrong things, and you're only exposed to correct information. And they've obviously extended this all the way across, just trounced across the Constitution. Free speech doesn't mean what it means. It's like free speech with air quotes around it because it means whatever they want it to mean. And we know that our newspapers are lying to us. The question would be, do you believe that markets are still free and fair? Like there's this one Wild West place you can go where it's just the pure scrum of individuals in the contest of wills and money to figure out the right prices for things? Or do you believe that there's some thumbs on the scale, that there's official intervention, that the same people who won't trust that you can interpret a newspaper article that has misinformation in it, which is just stuff that usually is just embarrassing to them, if they don't trust that you will read a sentence, do you think they would trust that you would understand a price for something? Like the idea that you would have totally controlled news and information, but you wouldn't have a controlled market doesn't make any sense to me. It's obviously markets are signaling devices. When they're going up, they tell people everything is fine. And that's an important signal to be running, obviously, right? So I've been seeing signs of increasing interventions in markets and official interventions, and I think I understand why, right? It's never a good time, Chris. If the markets signaled this right now, people might lose their hope and then the economy would collapse and people would lose their jobs. I'm sure they have a rationalized narrative structure for why it makes sense to control these things. Now, the price of oil, we don't have to speculate, is it controlled or not? Because we know that the Biden administration took our strategic petroleum reserve and released it into the market to drive the price down for political ends, right? He was first president in my life that day traded the price of oil. Like, we need gasoline prices lower. Look, I did that, right? And so obviously at the expense of the strategic readiness of the nation to respond to or be prepared for some future event. Like, oh, I don't know, maybe the Middle East gets spicier and oil flows get cut off through the Strait of Hormuz or something, right? So it would be great to have a fully topped off strategic petroleum reserve given the geopolitical considerations like what's going on with Russia, Ukraine, etc. Now, didn't do that. Somebody decided the right thing to do was to just sell oil, right? And I've been seeing that same behavior ever since. The level of oil in stockpiles around the world is at 5-year lows. It's below. They have to carry a 5-year band. It's below those levels. It's punching out a new 5-year low band. So we don't have a lot in stock. Don't seem to be oversupplied, and yet the price is in a very, very negative space, and that's because of the narrative that's been put around it. As much as anything, markets move on narratives. What would cause more people to be sellers than buyers? Well, narrative is a really important part of that. It's always narrative. Oh, AI, chips, NVIDIA, that's one narrative. It's a very up narrative, right? Now, when it comes to gold and silver and corn and wheat and oil, all the commodities, the narrative that's put out in the Western press, leading in the United States, it's undeniably negative, always, right? Oh, whenever gold falls, they talk about it really quickly. When it hits new highs, they barely write about it. That's a negative narrative structure, right? It's communicating, it's educating you. When you see gold hit an all-time new high and nobody's writing about it, it communicates to you it's not really important. Or even when they do write about it, they make sure to slip in these negative terms and words around it, it doesn't pay any interest. Gold has disappointed in the past. It hasn't been the most exciting of investments. It's okay, but it's really nothing that you want to brag about. You watch these terms and you start seeing them. You see there's an enforced narrative structure. And of course there is, because money is power and narrative is power. So that's how I interpret the markets now, as what are these markets trying to tell me to do? And this leads to an investment thesis, and it leads to an idea I've got. So let me continue to build this out. But this oil price is like, that does not make sense. By the way, this is going to have real world impacts, because that's the real world price of oil, that real world people who put drill bits in the ground and go through all of the rigmarole of getting oil, wrestling those molecules out of the dirt and bringing them to market. When they are not getting a fair price, or the price is below what it costs them to get that stuff out of the ground, they tend to not go get that stuff out of the ground. Run that long enough and you find a wicked supply shortage. But, corn, I mentioned, is another commodity, literally the same price. Farmers are getting the same price for it today as in 2007. Can you imagine trying to live on your 2007 salary? Can you imagine that whatever it is that you sell or do in life was worth exactly the same in nominal dollars as it was in 2007? If you pulled out an old grocery bill from 2007 and seen the prices of things, it's astonishing how much cheaper stuff was, right? So all of those same pressures apply to farmers. Obviously, their input costs are more. Tractors cost more. Fertilizer costs more. Seed costs more. Everything costs more. Everything. But what they get for their product, exactly the same. This, again, is because we have in the United States a game of rigged paper markets where it's not producers and consumers setting the prices with each other. Corn farmers, corn, utilization, manufacturing, and something like Kellogg's. Like, that's it. Those two, farmers sell corn, Kellogg's buys corn. But in between them is this huge, giant world of hedge funds and speculators and private equity and big banks and financial centers and all those other things, busy buying and selling and trading paper promise tickets that represent corn, but nobody actually takes possession of the corn in that chain. And so there's a lot of noise. The signal is, how much do producers get and how much do consumers get at the end? That's the signal. The noise is all the people who trade on that corn or the oil or the silver or the gold, but never take any delivery of any of it. It's a broken market kind of an idea. Obviously, it's going to lead to trouble at some point. But until then, it also leads to opportunities, because there is a broken narrative structure in here. Again, the system, wants prices for things to be lower, and they don't care if it harms consumers. They don't care if farmers go out of business. They don't care about any of that stuff. What they care about is that a political party can get to say, look, your cornflakes are not as expensive as they could be, but they squeeze the farmer. They don't squeeze the Kellogg's people. Trust me. Farmers are getting the exact same amount for a box of cornflakes on the farmer end, and they cost a lot more than they did in 2007. So the problem isn't the farmers, but still, farmers aren't a big organized block and they don't know how to push back and they never can just sort of like go on strike. So they don't get to advocate for their ends, so they have no power. And because they have no power, they have to put up with this junk. That's what happens, right? So producers typically have very little power because they're really caught on the horns of a dilemma. Like you have to, if you don't produce, you'll go out of business. But if you keep producing at these prices, you'll go out of business. That's the horns of a dilemma. Which do you do? Do you rip the Band-Aid off or do you sort of struggle and suffer along? Usually people struggle and suffer along, and then you get a chart that looks just like this. But eventually, the whole thing gets wrecked. Now, back to Germany. Let's talk about Germany for a second, because I think this lays the whole thing out. We can understand the entirety of the hot mess our markets have become if we can just understand a fractal, smaller representation. That would be Germany. So Michael A. Arrowet talking here, this was a couple of days ago, said recent job reductions in Germany, it doesn't include 30,000 at VW yet. And VW is going to close factories, not slow them down. They're going to close them for a period of time, maybe forever, who knows. This is such an unusual thing in Germany. In Germany, workers actually have rights, big rights. And so to go through layoffs is actually a very, very painful, very expensive decision. It's not like in the United States with at-will employment. Adios, Deutsche Bahn minus 30,000 workers, ZF minus 14,000, Continental, SAP, thousands. So we're seeing just a wall of layoffs in Germany. You know why? Because the German economy is sucking wind right now. It is not doing all that well. And we can see that as well. And Holger Schapitz here says, good morning from Germany, where the week kicks off with more bad news. This just came out about a week ago, this news. For the economy, S&P's Global Flash Purchasing Managers Index, the PMI, fell more than anticipated to 47.2. Anything below 50 means the economy is in contraction. So we now have a contracting economy in Germany. It's falling, and it fell more than expected. So these are the purchase managers. These are the people who buy the raws, the intermediates, etc. Purchasing managers, also finished goods. It's a purchasing managers index is a good way to figure out where your economy is actually going, because they're the ones actually reading, at the finished goods end, they're reading what they need at the demand side of this, and all the intermediate purchasing managers along the way deciding what they need to balance out their particular supply chain ins and outs. And they are, as a group, now in contraction, not expansion. So contracting economies are consistent with falling stock prices. And we have a contracting economy. So Germany's economy has been going backwards. Here it is being compared by Bloomberg to California's GDP. You can see roughly the same, but it was all the way well over $4 trillion, and it slid all the way back to like 3.5. I mean, this is a pretty big erosion. So the German economy for the past few years has been contracting, okay? Yet we see German stocks at an all-time high. What gives? What is this all about? How do we explain this? Well, we can see actually every single country that's currently undergoing the Western civilization dismantling project, which, if you aren't aware of that, well, it includes Western values being tested to the breaking point. These would be things like, do you have a secure border or not? Do you have a coherent culture? Are you elevating the best possible leaders into positions of power? Do parents actually have rights? What does it mean, from a gender standpoint? Are you actually feeding your nation with wholesome foods that lead to health, or the exact opposite? Yada, yada. So we're definitely under tough times here. And so we see the Dow Jones Industrial Average in the top left there, the S&P 500 just screaming higher all these years. We have the Nikkei 225, which is Japan's stock market, screaming, even though Japan, oh my God, they have a declining, aging population, which is most consistent with an economy that doesn't need to be as robust. But we see their stock market going higher. And I put the quotes around it because actually what we're seeing here in all of these, this is consistent with central bank money printing. When they print a lot of cash and they create easy financial conditions, and you have these giant financial machinery centers that go out and what's the definition of financialization? It's when you make money using money. You don't make widgets. You don't make things that people need. You make money with money. This is a mechanism for making money with money. It's also a mechanism for laundering the money you make with money. And so that's why you see more buyers than sellers and all these prices rising, is simply because the central banks of the world, particularly in the Western world, have been flooding their societies with freshly printed cash. And it's just how it's been for many, many, many years. They've decided their narrative structure is, well, this is the right thing to do, because if we didn't do this, think of all the bad things that would happen, right? That's how they tell it to themselves. The only thing that I didn't put a green arrow on is the Russell 2000, which has not been making all-time brand new highs out of this whole thing. It's kind of near its highs, but it hasn't been powering to all-time new highs. So not clear about what that actually indicates at this point in time. Now, managing your money within this context is exceedingly important. This calls for real nimbleness, because this is one of these situations where it's kind of good till it's not, and then it becomes very not good. And as I mentioned before, also the CEO of Peak Financial Investing. And if you're used to tuning in and seeing Paul Kiker, there he is right there. He is one of our top endorsed financial advisors, just an amazing guy, does extraordinary things for people and helps people with their planning. So if you have a portfolio, if you have wealth and you want it to be, have a good looking at, and you want it to be managed really, really well, I invite you to go to peakfinancialinvesting.com, fill out a simple form. Somebody from Paul's team will contact you within 48 hours, and they just do an exceptional job. It's such a beautiful thing. The number of testimonials I get back from people saying, thank you for connecting me with Paul and his team. They are doing such an incredible job with and for me. I have so many emails like that now. It's wonderful. So love being in this this system business where I can connect people with great people, and just makes a lot of fun for me. So back to the story. What is this? Why are we seeing all of this just like euphoria at this particular time? I mean, we've got Russia, Ukraine, the Middle East, all these signs of popping rivets inside of economies, right? House prices and real estate, commercial real estate is a complete unmitigated disaster in the US. It's like not even denting anything in the stock market. What is going on? Well, let's get into the possible interpretations. One, well, the future is just a lot brighter than those current indications would indicate. So I can't see it right now, but maybe everybody else can, right? Yay, here's how the future is just going to be amazing. We're going to have these really robust economies. The insects are going to come back. People are going to get healthy again. All these died suddenly things are just going to go away mysteriously, and the sun comes out, and Russia and Ukraine shake hands and make up, and Israel and Hamas shake hands and make up, and maybe that's the future. Of course, that hasn't been the trend we've been on for many, many years, and things are getting jankier and jankier, and the United States all by itself is off on a wicked tear with respect to destroying its own financial, fiscal, monetary position, right? Because the fiscal deficits of the U.S. government are mind-boggling, right? $35 trillion in debt and going up by at least $2 trillion a year as far as the eye can see. Crazy talk. So one possible interpretation, I love this, is how I roll. If you come up with an idea, a hypothesis, you have to consider all the possibilities. This is possibility one. The future is actually a lot brighter than seems, that we can detect from the data, and the market figures that stuff out because the market is smart. Okay. Tina, that means there is no alternative. Tina, all that new cash has to go somewhere. So there's just no alternative. Like, if you had to spend $1 bazillion all at once and you're in Walmart, you might have to hold your nose and buy some things you wouldn't otherwise buy, right? It's just what you have to do if there is no alternative. So all this new cash has to go somewhere. And the narrative structure says, well, shouldn't go into oil. It shouldn't go into corn. Definitely shouldn't go into those things. Where would you put it? All this new cash that's being printed. Where does it go? Well, it's got to go somewhere, right? So the United States government, all on its own, is injecting $2 trillion of cash. Well, let me back up a quick second. When the United States government has to spend money it doesn't have, It goes to the bond market and it auctions treasury notes, bills, and bonds. Treasury notes, bills, and bonds are tier one assets, meaning if you have a portfolio with like $1 billion of treasury, bills, let's call bills, 28-day paper. You got $1 billion in 28-day paper, right? It's as good as cash, right? You can spend it, borrow it against it. It's as good as cash. So when the United States government is busy throwing $2 trillion of fresh printed, minted treasury tier one assets out into the market, it might as well be just spewing $2 trillion in cash out into the market, right? Because that's what it does, right? That's 2 trillion addition. That's so stimulative. It's like off the charts. Plus, the United States government also has to emit another $1 trillion, a little over, of interest payments back. Where do those go? So this is highly stimulative when a government is deficit spending nearly 7% of its GDP, which the United States government is. That's a lot of cash. Okay, that cash comes out. Some of it rolls back into more government paper, but some of it probably rolls into the markets, into the rest of the market. So all that cash got to go somewhere. Here's another possibility. It's just bad narratives, false narratives. There's a rescue. Here's the narrative. Chris, don't worry. You know why? You know why stocks are going up? Because we know they should be going down. And perversely, that means that we know that there's a rescue right around the corner. And we know the Fed's going to go into QE and print more money and do whatever it takes to keep the markets going up. Because you just showed us all those charts where they just keep going up and to the right. Well, that's courtesy of the Federal Reserve. So they're going to keep doing that. They've been doing it. I see no reason for them to stop doing it. So I'm just front running these future rescue operations because I know they're coming. Okay. That's been a true narrative for a while, but it could be a false narrative. Or it could be that there is that metric ton of fresh central bank currency printing right around the corner. We know that. Another possible interpretation, I like to default to my man George on these things. He said the last official act of any government is to loot the treasury. Now, I think we've been seeing that with the $42 billion spent on internet under Kamala Harris's watch, which didn't link up or sign up a single internet connection, not one, right? Or we saw those charging stations where I think they spent, I don't know, $7-8 billion, and would they get like 4 charging stations out of the deal? That's just corruption. That's just looting. That's watching run-of-the-mill congressmen and congresswomen come in, and within a few years, their net worth has gone up by tens of millions of dollars, right? That's just looting. It's all corruption. It's looting. The Ukraine war. We say, oh, we sent, $12 billion this week to Ukraine. None of it went to Ukraine. It went from a server in New York to a server in New York because, it went from the U.S. DOD to Raytheon for more missiles that got shipped over it. Trust me, when we give billions to Ukraine, it doesn't actually go there. Pro tip, right? So war is a racket, obviously. So it's possible that this is actually, it's all kind of rigged at this point in time. And the people who are in on the rigging are making out like bandits on it because they know the rigging. They know how the cards are marked in this story. And that's why everything goes up and to the right. And the people who know that are positioned properly, and they're harvesting this situation a lot. Now, this leads to my approach to investing and actually to life itself. I kind of admit the stage of life where I do the exact opposite of what I'm being told to do by the keepers of the state, right? The official narrative keepers. They say, here's how the world works. You should X, Y, and Z, MSNBC, CNBC, CNN, and the CDC and the FDA. I do the opposites of what they say now, right? If they say you should be really excited by NVIDIA chips, I'm kind of unexcited. It's like my default position. I'm not saying it's right. I'm not saying you should follow this. It's not financial advice. Absolutely isn't. I'm just telling you how I operate now because I found that more often than not, that what the state wants me to do, or the state media, the regime media wants me to do, is actually against my better interests. Here, quick example, CDC, right? So this is pulled right off of the CDC's website, right? It's about how to, eat, enhancing your immunity. And they say you should eat well. CDC says you should eat well. And their definition of eating well, quote, means emphasizing plenty of fruits and vegetables, lean protein, whole grains, fat-free or low-fat milk, and milk products. Eating well also means limiting saturated fats, cholesterol, salt, and added sugars. Now, some of that's okay. I think the added sugars, absolutely. But limiting saturated fats, now contrast that with actual science-based advice that comes to us from Paul Merrick at the FLCCC. That's the Frontline COVID Critical Care, but they don't do so much COVID anymore. So if you wanted to see that, go to the FLCCC's website. They have science-based advice on proper nutrition, which is you just read the literature and you look at actual health outcomes, and you determined that, well, fasting is simple, it's free, it's powerful, it's flexible. So CDC doesn't even mention fasting as like, totally mute on that one. And they also say a low carbohydrate, high fat diet is the optimum choice. Saturated fats and omega-3 fatty acids are both healthy fats. Don't be fooled. Directly opposite what the CDC is saying. And the CDC is saying stuff that isn't based on science. It's based on, I don't know what their main sponsors within the food industry want them to say. I don't know. But it's junk. It's complete junk. But isn't it weird that every time the CDC recommends something, it almost invariably serves to make me sicker and more unhealthy, right? I mean, if you're in the CDC, you ought to be profoundly embarrassed by the fact that when we look at obesity maps for the world, that the United States is one of the brightest red places with over 40% of adults being obese. Whatever you're promoting, CDC, is obviously not working. It's obviously a complete failure. It's obviously working against the better interests of the people you ostensibly serve. Remember, you're supposed to be public servants. I wish we could just fire these people. I'm their employer as a taxpayer. Just fire them all right there. You're fired. You messed up, right? This would be like, you got a truck driver you just hired and they just like backed into like their fourth building this week. You're like, that's just not your job. Just not. Stop. Go find something else to do. Okay. This is a complete train wreck, right? This is obviously not working. So you would think they would somehow have a corrective mechanism in there to go, maybe we got this all wrong. But they don't do that. So that's why I follow people like the FLCCC and Paul Merrick. I don't follow the CDC. Similarly, you open up and you see like, all this green going on. This is today's headline, green going across all these things, but surging NASDAQ lead stock higher as chip makers rally. Well, there's this whole story going on about chips and AI, and it's just exciting. But it gets, look at the picture. Look at that guy almost looks drunk if he's not drunk with glee. And it's because chip makers are rallying. This is both overt and covert marketing for you to really buy into and get excited about the AI story. But nobody ever can articulate like, what is it actually doing for us right now? Like I get the promise of it, I guess, sell the sizzle, a lot of sizzle, right? But look at this. AI trade gets a boost and the U.S. economy gets another bill of clean health. Again, from the government statisticians who just routinely lie to us. They lie to us about how many jobs we have. They lie to us about how high inflation isn't. They lie to us about the state of the health of the economy. It's just been nothing but gaslighting the whole way along. But this is propaganda. Look at that guy. All excited because chip makers are rallying. You should be excited by chips. Now, I think there's a larger story here, which is why this week's piece for my subscribers at Peak Prosperity, I got to talk about this. There is something going on about trying to get us excited by data centers and AI that I'm not buying. It just doesn't pass my smell test. So we're going to talk about that tomorrow. So keep on a lookout for that if you're a Peak subscriber. This is a big deal. This is actually a big deal. Now, here's what happens routinely, though, when I want to talk about narrative control in the markets, because prices kind of set the tones, right? Now, here we see all night long, gold is being bought. This is coming in through all night long in Asia, right? And so this is 8 o'clock right here at this boundary between this gray and this white. That's 8 o'clock. That's when the United States markets open at 8:30. So gold is climbing right until U.S. markets open. And then boom, it just gets sold because you know what? This is how it is. The United States sells gold. We also sell silver. Same story. It's bought. As soon as the US market's open, boy, it just gets slammed. Now, this is why, let me articulate why this is important, because this is actually narrative control. It has nothing to do with suddenly, all of a sudden, investors became concerned that silver was like not a good investment at 8:30 on the dot when the US paper market's open. This is the pattern. This is a long running machine, and I'm actually happy for it because I like to buy silver, not investment advice for you, but for me, I happen to like buying real things. I'm one of those people. I like hard assets a lot, and I like buying things cheaper than more expensive. So these are very helpful people in as far as I'm concerned, who in Wall Street, they constantly drive the price of silver down. That's all they do. They just drive it down. They just constantly make silver cheaper. Now that's really bad for the producers, and I feel terrible for them. And I think it's really bad for helping people to understand what's really important. But that's, of course, why they do this. Selling silver and gold and oil is part of their narrative control. Has nothing to do with, is that the right thing to do? Is this good for the long-term health of the country? Does this send good signals that helps people make better decisions in their lives? It's not that. That has nothing to do with nothing. This is about them being greedy little raccoons for their own narrow purposes, and the U.S. government turns a blind eye to it because it supports the government's main narrative thrusts. That's how those two pieces work. But let me show you how outrageous this is. Okay, so if you there's two times you can buy silver. Let's say one is while the U.S. markets are open. Okay, so 8:30 to 4:30, right? Or you could buy it after that time. We'll call that the overnight market. So you either buy it in the day market in the United States, which really you're not actually usually buying silver physical. You're buying paper representations. Those are called silver futures, right? So that's where the market price for these things gets set. The price for silver doesn't get set, or gold does not get set, because a physical holder and a physical seller came together, agreed on a price, and that's the price you see. It's because these paper contracts get just churned out like crazy, huge quantities of them. Like yesterday's paper in silver was something close to 600 million ounces, when the whole world yearly mine output for silver, that's the producer side, is about 820 million ounces. So like 75% of world mine output traded hands yesterday, all in an attempt to keep the price of silver down. And here's how it plays out over time. So again, two separate times you could possibly buy silver: during the U.S. market and not in the U.S. market. We'll call that the overnight market. So the day market, the night market. So if you're in the day market from 1970 to 2024, if you had just held silver during that moment, like you buy it when the U.S. market opens at 8:30 and you sell it at the end of the day, if you'd done that every single time, from 1970 to 2024, silver is now trading at 13 cents an ounce for you, right? That silver would be worth 13 cents an ounce if from 1974 to 1970 to 2024, it had only been allowed to trade in the U.S. markets. That's it. It went from its price in 1970 to 13 cents an ounce. However, if you had only bought silver and held it for the overnight portion of the ride, right? U.S. market closes, you buy silver, you hold it all night long. Asia's doing what it's doing. The rest of the world's doing what it's doing. But right before the U.S. market opens, you sold it. Silver would now be worth $342.72 an ounce. So this is very simple. The United States sells silver, and that's it. The rest of the world buys silver. Now, this is a story that's been going on for a long time, and I can smell it breaking. It's about to end. I don't know if it ends this week or it ends in 5 years, but this model is totally broken. But it's what the United States does. The raccoons on Wall Street can't help it. That's the model they run, and it gives you markets that look like this every single time. So again, this would be you buying silver and holding it during the overnight, but you sell it right before the U.S. market opens, and then it gets crushed. And it's a thing. And by the way, in markets, things like this don't persist for a long time because people figure them out and they trade them away, right? Then why not? Everybody should just hold silver overnight and just sell it during the US market. But if everybody does the same thing, it doesn't work anymore, right? That's just the definition of markets. Everybody can't, there has to be somebody on the other side of the trade for it to work, right? Everybody can't be doing the same thing. But this is how it's been working for so long. And I don't know how they rig it like this, but this is a rigged market. It is impossible for a vital industrial commodity to only ever be sold in the United States market and to only ever be bought in the outside of the market. It's just a crazy situation, but it's where we are. And that's the narrative structure. And it's just nuts. And by the way, night is when the mice come out to play. This is last night, starting at 4 a.m, right? Which is how these things work. Starting at 4 a.m, U.S. stock futures for the S&P, which is now at an all-time new high, started being bought and bought and bought. And then right before the U.S. market opened, they're just flattening out up here. So, hey, investors, they're going to say, investors are cheered by, you saw the headline, chips. It was chips in AI. That's what investors are cheered by. Well, investors started getting cheered at 4 a.m, right? They didn't wake up and suddenly say stocks are up, and they pretend like the stock market just opened up because investors were cheered by chips and an improving outlook on the economy. The U.S. economy did not have an improving outlook at 4 a.m. I'm just telling you, this is how the markets actually work. Okay. And so the mice come out and they ram stocks higher in the overnight and all of that other stuff. And then, when we wake up and we're told about the cash markets, oh, silver fell today, stocks went up today. They didn't. They did all of that in the paper markets. And then cash prices had to adjust to those. It's how it's been running for a long time. It's just how it is. It is a gigantic looting operation. No question about it. But what do we do with that? And how do we make sense of this? And what are the implications? Well, here's the thing that I'm concerned about. When everybody knows the same thing, then nobody knows anything. And everybody knows now that the stock market is always going to be rescued because it's been true since about 2001 when the stock market fell. The Federal Reserve rode in, and then Ben Bernanke did everything he could to just keep everything inflating. He accidentally blew up a housing bubble, but they kept inflating it again, and on and on and on. So this has been the game for 20 plus years now. The Federal Reserve is going to come in and they are going to rescue the system. So just play along with them. Don't fight the Fed. I get it. Here's the problem. What if there's a rug pull coming? What if all this effort to keep everything propped and suppressed is going to ultimately lead to the central banks at some point yanking the rug? What if they don't rescue the market next time? I think you need to be ready for that. It's why I advise Paul Kiker of Kiker Wealth Management and his team, because they run what are called risk managed portfolios. It's a lot more complicated, takes a lot more effort, but boy, is it worth it, because there's some risks out there and you need to make sure that those are managed appropriately. If you're all in on this story and you're thinking, listen, Chris, sounds too complicated. The Fed's always going to rescue the market. Listen, you've been right. Maybe you'll continue to be right. But I'm just going to pose something. What if there's a rug pull? What if next time the Federal Reserve just says, oh no, we have to be, they'll say some language like, we have to be judicious and careful, and so we're going to step back from this. We can't risk inflation. Whatever. They will come up with it. So you might have a whole portfolio. This is supposed to represent a portfolio. You got some stocks, you got some indexes, and you're like, well, the Fed's always going to rescue this whole thing, but oh no, there's a big, giant, nasty downdraft. And it's, it's so bad that it actually activates the machinery of the Great Taking. Now, if you don't know what the Great Taking is, you really should. I'll tell you more a little bit about that in a second. But the Great Taking is a bunch of legal triggers that have been installed in the United States and also mostly Western world legal code that says under certain circumstances, things get bad enough, they end up taking your stuff. Because, the system, it would be terrible, unthinkably awful if one of the central clearing parties or an intermediary or depository trust corporation or a major brokerage house actually failed. That would be terrible. So because it's so terrible, we're going to have to take your stuff and make sure they're whole and cared for. Anyway, more about that in a second. So, oh no, your entire portfolio is oh no, listen, this is terrible. Your $500,000 portfolio, you still have it, but it kind of looks like it might actually be taken because of this great taking thing. It could happen. We're very sorry. Listen, wait a few years and maybe the legal system will churn through and I don't know, maybe you'll get it back. More likely it's some cents on the dollar kind of a thing, or maybe it goes to zero. We don't know. We're really sorry. It's going to be years before you can even access that again. Oh, you have retirement costs today? We're really sorry. Oh, good news. You have a beneficent central bank. And you know what we're going to do? One-time offer. Got to make a decision quick. Limited time offer, 24 hours. Figure it out. We'll make you whole. Your entire $500,000 will be given back to you in the form of a central bank digital currency. We good? And a lot of people will take that deal, and I totally understand why. And under certain circumstances, I might take that deal. But if you watch what just happened, you weren't made whole. You held ownership interests in companies. You had an ownership piece. Now you just have slave bucks, right? And why do I call them slave bucks? Because that's what they'll be. The programmable currency. They can program anything into it they want. I had lunch with RFK Jr. about a year ago, and I asked him if you had a single platform you could run on, just one plank, what would it be? And he said, central bank digital currencies. Because once we get those, it's all over. No freedom, no vitality, no entrepreneurialism, no more growth, no more all that, because all of a sudden our every decision and our movements will be in the hands of bureaucrats and little mini dictators all over the place. And so this is the end of freedom, right? And it puts your life into complete control. And if you don't understand all of that, I did a great podcast with the even greater Aaron Day. You can find it at that link down there. This is a great podcast. Just put it on, listen to it. Aaron's got a bunch of other stuff. Find Aaron. Aaron is the world expert on really what we're facing here. And he's just a wonderful communicator. So check that one out if you want more context on that. And if you don't understand the great taking as well, you can find it on YouTube. You can find it at my website at Peak Prosperity. I have a 9-part series on the great taking, going through it in great detail, because that's how I am. I'm a source information kind of guy. I like, really diving in. The Great Taking, of course, is the book and outlined by David Rogers Webb. It's amazing. Read that book as well. The Great Taking. You need to understand the Great Taking. It's really important. And once you do, you might go, oh, I should probably do something about this. But what can you do? It's tricky, but we do have a Great Taking webinar series that you can find back at Peak Prosperity. And this is a webinar series that talks through 7 specific steps you can take to protect your wealth from the great taking if you so desire. So that's who I am and what I do. Education that leads to some sort of like conclusion that you can't act on, I'm not interested in that stuff. It's time to become resilient. It's time to become prepared. It's time to understand how the system has been made overly complicated so we don't understand it, specifically so that they can raccoon our prosperity and our wealth away from us. That's how it's been playing out. There are ways to avoid that, but first, you have to understand the system. That's the context. That's what I do at Peak Prosperity. If you think this way or this resonates with you, you're definitely going to want to become a subscriber at Peak Prosperity because, well, you deserve to know what's actually going on. I'm an information scout. I like figuring stuff out and explaining it in clear ways so that people can understand it. But then 2, you need to be taking action around this stuff. I believe in being resilient, and our community that's assembled around this also believes in that. Remember, hey, plant a garden. Remember, it doesn't have to be this way. And you know what? I'm going to go further and say it shouldn't be this way, but it is. So, got to play the game. If, we can't set the rules of the game, we understand the rules of the game at least. So that's what I do. Help us understand the rules of the game. I think something's going on with our markets. It doesn't smell right. And the AI data centers don't smell right. And we're going to have to understand what this means, what the implications are, and what we can do about it. So with that, thanks very much for listening. We will see you next time. And I hope you got something from this. Leave your comments down below. And I hope you get something from this and even more to the point, I hope you take action. Bye for now.